You know, it's funny, everyone wants to know when to buy crypto, but very few people talk about when to sell. And here's a harsh truth. According to research from Bitwise Asset Management, approximately 95% of crypto traders lose money in the long run. One of the biggest reasons? They don't have an exit strategy. Think about it. How many times have you seen your portfolio go up 50%, 100%, maybe even 200%, only to watch those gains evaporate because you didn't sell? You're not alone. A study by Dalba found that the average cryptocurrency investor underperforms the market by nearly 5% annually, primarily due to poor timing decisions and emotional trading. So today, I'm going to share a comprehensive strategy on how to take profits in crypto that's based on logic, not emotion. Let's dive in. Before we get into the strategy, we need to understand why selling is psychologically harder than buying. When Bitcoin went from $20,000 to $69,000 in 2021, do you know what most people did? They held. They thought it would go to $100,000, $200,000, maybe even $500,000 like some influencers predicted. Then it crashed to $16,000 in 2022, and those same people were sitting on massive losses. This happens because of two psychological biases. First, there's greed, the fear of missing out on even bigger gains. Second, there's loss aversion. Once you've seen your portfolio at a certain high number, selling for less feels like losing money, even if you're still in profit. The solution? Having a predetermined plan that you follow no matter what. Here's the strategy I recommend, and it's based on taking profits at predetermined intervals. This removes emotion from the equation. Let's say you invest $1,000 into a cryptocurrency. Here's how the scaling out works. At 25% profit, sell 10% of your holdings. Your initial $1,000 is now worth $1,250, and you're taking out $125. At 50% profit, sell another 15% of your remaining holdings. At 100% profit, this is crucial, sell at least 25% to 30% of your remaining position. This means you've now taken out your initial investment or very close to it. You're now playing with house money. At 150% profit, sell another 20%. At 200% profit or higher, sell another 20 to 25%. Here's why this works. Let's run the actual numbers. You start with $1,000. The coin doubles to $2,000. If you sold 30% at the 100% profit mark, you took out $600. The coin then crashes 50% from the top. Your remaining $1,400 is now worth $700. But you already extracted $600 earlier, plus the smaller amounts from the 25% and 50% profit levels. You're still in profit overall, even after a 50% crash. Compare this to someone who held everything hoping for more gains. Their $2,000 became $1,000 right back where they started with nothing to show for it. Here's another approach that works well, especially for long-term holders. It's called the time-based rebalancing strategy. Every 3 months, you evaluate your portfolio. If any crypto position has grown to represent more than a certain percentage of your total portfolio, let's say 30%, you sell enough to bring it back down to your target allocation. This strategy forced many smart investors to take profits from Bitcoin in 2021. When BTC went on its run to $69,000, it naturally became a larger percentage of portfolios. Rebalancing meant selling some at those high prices. When the crash came, they had cash ready to buy the dip. According to data from Glassnode, wallets that showed a pattern of regular selling during 2021's bull run were 3.5 times more likely to still be in profit by the end of 2022 compared to wallets that only accumulated. For the more technical traders out there, using moving averages can help time your profit taking. The 20-week moving average has historically been a strong support level for Bitcoin during bull markets. When Bitcoin is trading above the 20-week MA, the bull market is generally intact. When it crosses below and stays below for several weeks, that's often your signal that the party is ending. Looking at historical data, every major Bitcoin peak in 2013, 2017, and 2021 saw Bitcoin cross below the 20-week moving average shortly after the top. If you had simply sold when Bitcoin closed a week below this level, you would have avoided the worst of each bear market. You don't need to sell everything at once, but when the price crosses below this level, it's a good signal to start taking more aggressive profits, maybe selling 20 to 30% of your position. This one requires you to understand where we are in the crypto market cycle. Historically, Bitcoin has followed a relatively predictable 4-year cycle related to the halving events. The pattern generally goes, Bitcoin halving happens, followed by 12 to 18 months of bull market, then a bear market lasting 12 to 24 months, then accumulation before the next halving. We saw this in 2012 to 2013, 2016 to 2017, and 2020 to 2021. The Bitcoin halving in 2024 suggests we may see peak euphoria sometime in 2025. Now, I'm not saying you should bet everything on this pattern continuing, but it gives you a framework. If we're 12 to 15 months past the halving and everyone around you is talking about crypto, their uncle is asking how to buy coins, and you're seeing cryptocurrency commercials during major sporting events, that's typically closer to the top than the bottom. Take the 2021 peak as an example. We had Matt Damon in commercials, stadiums being renamed after crypto exchanges, and Dogecoin being discussed on Saturday Night Live. Retail interest was at all-time highs. Google search data for how to buy Bitcoin peaked in November 2021, the exact month of the market top. Here's something many people forget: taxes. In most countries, including the United States, you pay capital gains tax when you sell crypto. Short-term gains on crypto held less than a year can be taxed at your regular income tax rate, which could be 30 to 40% or higher. Long-term capital gains on crypto held more than a year are usually taxed at lower rates, often 15 to 20%. This means your profit-taking strategy should consider your holding period. If you're close to the 1-year mark on a position, it might make sense to wait a few more weeks to qualify for long-term rates. Also, consider taking profits in years when you have other losses to offset gains, or in years when your income is lower. Let me quickly cover what not to do. Don't wait for round numbers. So many people say, I'll sell when Bitcoin hits $100,000 or when Ethereum hits $10,000. The market doesn't care about your round numbers. Sell based on your strategy, not arbitrary price targets. Don't sell everything at once unless you have a specific reason. Scaling out protects you from selling too early. Don't forget to actually move your profits to safety. If you sell crypto but immediately buy another risky altcoin, you haven't really taken profits. Move at least some to stable coins, fiat currency, or other asset classes. Don't let taxes paralyze you. Yes, you'll owe taxes on gains, but paying 20% tax on a 200% gain means you still made 160% profit. That's better than paying zero taxes because you held through a crash and have zero gains. Let me share what I personally do. I combine several of these strategies. I take small profits at regular percentage intervals starting at 30% gains. At 100% profit, I always take out at least my initial investment. Always. This gives me psychological freedom because I'm now risk-free on that position. I also pay attention to market cycles and sentiment. When I see extreme euphoria, I accelerate my profit taking even if my price targets haven't been hit. And I always keep some cash in reserve to buy the inevitable dips. Because here's the thing about crypto, it's volatile. Crashes will happen, but crashes are also opportunities if you have dry powder ready. Look, taking profits might mean you don't catch the absolute top. You'll probably sell some crypto that goes on to double again. That's okay. The goal isn't to be perfect. The goal is to make consistent profits over time. Remember that statistic I mentioned at the beginning? 95% of traders lose money. Don't be part of that statistic. Have a plan, stick to it, and take profits. If you found this video helpful, please hit that like button. It really helps the algorithm show this content to more people who need to hear it. And if you haven't already, subscribe to the channel because I post videos on crypto strategy every single week.